Hey guys, welcome back to the channel where we cover all things real estate in the greater DC area. In this video, we're going to go over the July housing market data as well as national data and what it means to you if you're looking to buy right now and if we're past the worst of the housing market in terms of inventory as well as interest rates. Let's get started. Okay, getting into our first indicator, which is number of active listings, and this is in reference to the areas in which we serve. Those are Washington, D.C., Montgomery County, Maryland, Alexandria City, Arlington County, Fairfax City, Fairfax County, and Falls Church. So going to the active listings here, we can see that year-over-year data is not great for the area overall. DC having the best performance of the three jurisdictions, but nationally it's not that great as well, right? Inventory is down across the board, and the growth of inventory is also slowing. So listings are down everywhere, but they are normalizing here, which we'll get into in just a little bit. Okay, getting to our next two data points, which are pendings and closings, right? We have active listings, then they go under contract, and then they sell. So active listings are significantly down year over year, which they are. When we look at year over year numbers, we see pendings and closings are also down year over year. Not a huge shocker there. But are we seeing a healthy amount of deals close relative to the active listings on the market? Yes, we are. So that I'm not surprised about. That is a good sign for this region, for the health of this real estate market. Okay, getting into days on market, which is our next indicator. As you can see, throughout the summer, it's been pretty flat across the board. DC's been about 6 weeks on average for all properties. Northern Virginia and Maryland are right under 3 weeks each for all properties across the board. But this is very localized, and certain neighborhoods move very differently than others. For instance, I have a client who has a listing coming up, and for their property and in their neighborhood, our measure of success will be 7 days for it to be under contract. And we're expecting multiple offers provided we are priced correctly and in good or great condition, which we will be. Now, if you are not in good or great condition in this market as a seller and you're not priced correctly, you are going to drag on. Your time on market will be much higher than it should be, and you will not hit anywhere near your list price. Hey guys, if you're getting any value out of this video, do me a favor, hit the like button. That tells YouTube you like this video and helps push it out to more people just like you. Okay, and that leads us into our next indicator, which is our closing price over our original list price. If it's 100%, that means it closed right at where it should be, where it was listed. And you're seeing it's pretty close to 100%. It's been consistent across the board. Now, this again is an average across the board. What happens here is the ones that are in good or great condition in our market, they go fairly quickly and they go at or above list price. The ones that are not, they go on average right around 90 to 95% of their list price. And these are people who are aspirational in pricing. They do not have their property in good or great condition. They're just listing the property and seeing what they can get for it. And the market's rejecting that right now with interest rates being at 7%. So you have to have yourself squared away if you're a seller in this market, in this region, good or great condition, and has to be priced correctly. Okay, usually at this point in the video is when I show you months of supply of inventory, so we'll throw that graphic up here for you. As you can see, it's been pretty consistent across the board. It's very tight inventory. Housing is very short here in terms of inventory. So now we're getting to the part of the video of why you're watching. Is it a good time for me to buy if I'm a buyer? And are we past the worst of the inventory issues and the mortgage rate issues, right? Are we past the worst of the market? In short answer, yes. That is the collective belief that is being put out right now. According to Housing Wire, we are past the point of fear of recession with the most recent job data that was put out. And as a result, the Fed has started to actually bring mortgage rates down. We were just over 7% at one point in July. And Altos Research is predicting that if we go from 7% down to 6% for mortgage interest rates, which is a very real possibility, that by springtime, housing pricing nationally will be up 5% across the board. What does that mean for the DC area? We're usually a stronger, more resilient area than the rest of the country when it comes to housing, right? We've got government here. We've got a lot of private companies. We've got, I've talked about in many other videos, all the companies that move in this area. So I predict housing here would go up greater than the national average, which it has been historically, and it's seen more resilience historically than the rest of the nation as a whole. So if you are a buyer and you can afford to buy in this market, I highly suggest you do what you can, as long as you can actually afford it, to move forward in that process and buy. And if you have any questions about that, my contact information is in the description box below. Now, moving forward, what does that mean for you if you are a seller? Now, if you are a seller, you have to have yourself squared away, as I mentioned previously. You have to have your house in good or great condition and be priced correctly. But if you're going to hold on in the next few months, more than likely you're going to see extra appreciation on your property. Speaking of which, here are the median price points for single-family homes across all 3 jurisdictions. We've actually seen a dip in DC, a pretty significant one the past few months, but that is in relation to inventory available, not the market as a whole, because when we looked at how well they closed to their original list price for those specific single-family homes, they were at 99%. So the houses that are on the market are still closing very strong. There's just less housing on the market in DC. Okay, and our last indicator, which we are the only channel that covers it, is the percentage of cash deals on the market, our investor index. And as you can see, year over year, across the board, all 3 jurisdictions, this is very strong. And this is a result of builders, developers, investors being very aggressive in this market with cash purchases to fund their investing opportunities, which there are many of in all 3 jurisdictions, but I see the most significant right now in DC. So if you are an investor of any kind, contact me for opportunities in DC, which there are a ton of. All right, and for our key takeaways, they're on screen for you, but just know that it's a good sign that it looks like we've hit the bottom of the inventory market. We've hit the top of the rates. At least that's what the signs indicate. Those will be cemented with the CPI that comes out in August. But until then, if you have any questions on whether it's to buy, sell, or invest and what it means for you, feel free to reach out to me directly. My contact information is in the description box below. And until next time, I hope to see you around town.